Hi everyone, and today we are going to discuss about the affordable housing finance companies in India. And at the end of the video, after reading all the data points, tell me in the comment section that what do you think which is the best company in this segment. So I have specifically made a report on Aadhar Housing Finance and compared with other players because in my opinion this is the best player in this segment, and we will get to know that why I am saying this. So let's start with the report. So the company was incorporated in 2010 and it provides housing finance solutions to the low income segment in India, and also their average loan ticket size is of around 10 lakh rupees, and they have a AUM of 25,500 crores as of FY25. Now let's understand a bit about their history. So Aadhar initially was a private limited company, and then it started their operations in February 2011, and in 2017 the DHFL Vasya Housing Finance and the pre-merger Aadhar Housing Finance, these both companies got merged together and they got listed in May 2024. Currently the company has expanded into 10 states with 100 branches, and also they have a pan-India presence. So that is one of their specialty. Also they are covered in 21 states and union territories with 580 branches as of FY25. If we take a quick look at their shareholding pattern, so currently promoters have 75.6%, FIs are holding 5.3%, DIs are 8.5%, and the others which are public have 10.5% in the company. And now let's get to the next segment, which is the peer comparisons in this segment. So the first company we are discussing already is Aadhar Finance. So currently their market cap is 19,000 crores. They have a net interest income of 1,545 crores. The net interest margin is 7.5%. And if we take a look at their P and PB ratio, the P is 20 and the PB ratio is 3, which is the lowest compared to all the other players in this segment. Now if we take a look at Aptus Value Housing, their market cap is almost 16,000 crores. They have a net interest margin of 12.9%. They have a PE and PB ratio of 21.5 and 3.7, which is slightly higher than Aadhar Housing Finance. Also, if we take a look at Home First Finance, currently their market cap is 14,000 crores. The net interest margin is 5.2, which is significantly lower than all the companies. Their P and PB ratio is 32.1 and 4.9. And if you look at Aavas Financiers, their market cap is 15,000 crores. The net interest margin is 7.64% and their PE ratio is 26.1 and PB is 3.4. And if you take a look at India Shelter Finance Corp, their market cap is almost 9,500 crores. Their net interest margin is 12.1% and a PE of 25 and PB of 3.5. So to summarize this table, Aptus Value has a higher net interest margin and they are clearly dominating in this part. But if we take a look at PE and PB ratio is very essential when we are talking about housing finance companies or any finance companies. So here we can see that Aadhar Housing Finance is dominating. So it's a little bit of mixture of other companies also doing good in this segment and Aadhar Housing Finance also doing good in this segment. Now let's get to the next segment, which is a geographic diversification they have, and this is one of the very interesting data point that why Aadhar Housing Finance is much better than other players. Because if you take a look at all the states which are mentioned over here, so Aadhar Housing Finance has very nicely diversified across all the states, whereas if you take a look at Aptus, they have a very high concentration in Tamil Nadu and Andhra Pradesh. If we take a look at Home First Finance, they are very much concentrated in Gujarat with 29% of their revenue. And if we take a look at Aavas Finance, Rajasthan is currently consisting 33% and Maharashtra is consisting 20%. And compared to Aadhar, they have less than 15% across all the states in India. And the reason I'm emphasizing this is because before looking at the upsides of any company, we should first look at the risk and how the company is diversifying their risk. And if you take a look over here, Aadhar Housing Finance is very nicely diversifying the risk. Now, if we take a look at the image I have attached on the right hand side, so the top 5 states consist of 60.5% of their AUM. And if we take a look at other 3 housing finance companies, so Aptus has 99% of their AUM concentrated in the top 5 states. If we take a look at Home First Finance, 72.5% consists in the top 5 states and 82% for Aavas. And now let's get to the next segment where we will compare the cost of funds across all the companies in this segment. So first, if we take a look over India Shelter, they have 8.7% of cost of funds. If we take a look at Aadhar Housing Finance, they have 8.2% of cost of funds, which is significantly lower than all the other players in this segment. So again, Aadhar Housing Finance is winning in this part. And if we take a look at the image I have attached on the right hand side, so here we can see that the yield which they are generating, the cost of funds and the net interest margin each housing finance company is generating. So Aadhar Housing Finance currently has a yield of 13.9% with a cost of fund of 8.2% and a net interest margin of 7.6%. And now if we compare with Aptus Housing Finance, they have a much higher yield and a slightly higher cost of fund compared to Aadhar Housing Finance. So that's why we can see that their net interest margin is at 13%. So here we can definitely see that Aptus Housing Finance has an upper hand in this part. And now let's get to the next segment where we will do the financial analysis of the Aadhar Housing Finance. So if we take a look at FY25, they generated a revenue of 2,700 crores. They gave a net interest income of 1,545 crores. They gave a growth of 19.9% this year. And if we take a look at their net profit, it is currently 912 crores with a percentage growth of 22% this year. And if we take a look at the forecasting valuations which is shared by BNK Securities, so they are expecting that their interest income is going to be 4,900 crores in FY28. If we take a look at their net interest income, that is going to be around 2,852 crores, which will be a growth of 22.7% growth in FY28. And if we take a look at the net profit growth, they are expecting that it is going to be around 1,600 crores. So we can see that they are going to grow more than 20% in the next 3 years. And also the management has said during their current con call that this is their motive, that they are going to grow 20% each year. Now let's take a look at the image I have attached on the right hand side. So this is the data point about the NPA ratio they have currently. So as we can see that their current gross NPA is around 1%, which is a very good sign. And they are expecting that they are going to keep it stabilized in the next 3 years. And if we take a look at their net NPA, it is currently 0.7% and they are expecting that it is going to be around 0.9%. So there is not very much fluctuation going to happen in the NPA ratio segment. And now let's get to the next segment where we are going to see that what are the management focuses for the coming future. So the first point, company has said that they are delivering consistent AUM growth with a focused retail strategy. So they have given strong growth in its gross AUM, where rising from 13,300 crores in FY21 to 25,500 crores in FY25. So that is a CAGR of 17.6% over the period of 4 years. And one of the good point is that their entire AUM portfolio remains fully secured, with retail home loans contributing 75% of the total portfolio, and the rest of the 25% is coming from the loan against property, which is largely in the micro LAP segment. And the average ticket size in this segment is of 8 lakh rupees. Then they have said that they currently have 2% market share in the low income housing segment, and the ticket size in this segment is around 25 lakh rupees. And the last point, in the urban markets, they currently have 55% of the company's AUM, while the emerging market contribute to the rest of the 45%, and their focus is to increase the share from emerging markets to 55% over the next 2 years. The second point they have discussed is about the diversified distribution approach, which we have seen above. So Aadhar currently has 4 segments. The first is the urban, the second is the emerging A, which consists of tier 2 cities. The next is the emerging B, which consists of small towns and the semi-urban cities. And the last is the emerging C, which is a very deep rural segment of the country. The third point they have talked about is the relatively lower cost of funds and the change in the borrowing mix to aid the margins, as we saw in the above table. And the fourth point they have discussed about is the risk-based underwriting and the in-house collection. So here we can see that they have 2 underwriting processes. So the first process is the loan applications from the salaried customers, which goes through 16 RPUs, which is the regional processing unit in each business region for the standardization, cost optimization and quick processes. And the second process is for the self-employed people who require a close understanding of the customer and their cash flow. And now let's get to the next segment where we will read about what has the management said during the current con call. So the first point they have said about the FY26 guidance. So they are targeting AUM growth of more than 20% in FY26, as we saw in the financial analysis. Then in the disbursements, they are expecting to grow by 18 to 19%. Their GNP ratio is expected to be in the range of 105 to 110 basis points. And also, they're focusing to reduce their cost to income ratio by 30 to 50 basis points. The second point they have discussed about is the AUM and the business growth. So currently they have crossed the 25,000 crores of AUM, which is a 7% growth Q on Q and 21% YOY growth. Also, they are focusing on emerging B and C locations as we saw earlier, and they are expecting higher AUM growth there. Also, their current AUM mix, which is 55% urban and 45% emerging, and currently they are targeting 55% in the emerging part as we saw earlier, and the average ticket size is 13 lakh. The next point they have discussed about is the operational efficiency, that currently their cost to income ratio fell by 104 basis point in FY25, and also 30% of their FY25 disbursements were sourced through the Aadhar Mitra channel. The fourth point they have discussed about is the margins and the yield strategy. So currently 79% of the borrowings and 76% of the assets are from the floating rate instruments. Then their urban yields are at 12%, while their emerging locations offer around 14 to 16% of yields. Then they have also entered into the northeast of India with its first branch in Guwahati. So this will definitely help them grow AUM wise, and also their borrowings grew 17% YOY. And the last point they have discussed about is the asset quality, that currently they are concentrated in secured retail loans. Then 60 to 70 basis point of stage 2 assets are actually stage 1 assets. So the basic difference between the stage 1 and 2 is that if a borrower doesn't pay before the 30 days, so he will be in the stage 1 of the default part. Then in the stage 2 part, if the defaulter doesn't pay before the 90 days, so he will be in the stage 2 part, and even after 90 days, if the amount is not being paid, so he will be transferred to the stage 3 part, and definitely no borrower wants to get into that part. And the last point company has talked about is their Q4 write-off, which is around 8 to 9 crores, and the total write-off in FY25 was around 32 crores. Now, after reading all the good points of the company, let's take a look at some of the risks they have mentioned. That the first risk they have talked about is the shift towards the self-employed borrowers, which increases the risk of the default. And the second point they have talked about is currently their business model is heavily reliant on the economically weaker sections and to the low to middle income segment. And now let's get to the last segment, which is the technical analysis. So first we will take a look at the chart of Aadhar Housing Finance. So after the IPO, currently it's in a consolidation phase, and if it grows continuously, what are the management expecting? So I think it will give a good uptrend in the coming future. Now if we take a look at the Aptus chart, so currently after the IPO, it's the same, that currently they are consolidating in a phase, but the good thing is that currently they are trading with a PE of 22, and before it was trading at around 36 or 37 P, so that was definitely higher. So compared to the P currently they have done a good re-rating in the few quarters, and also on 4th June we can see that they were trading at a volume of 4.3 millions. So definitely we can assume that some good funds or some big funds are buying in this company. That's why there might be a big volume in this company. Now let's take a look at the Home First Finance chart. So after the IPO, it came at a price of around 530 rupees in the market, and currently it is trading at 1400 rupees. So definitely technically wise, the stock price is going in an upward momentum. And if you take a look at their PE ratio, during this time the PE ratio was 60.8 in December 2021, and currently the PE is around 33. So from this data point we can say that Home First Finance is giving good quarter on quarter results, and they are doing good PE re-rating. And now let's take a look at Aavas Finance. So in Jan 2022, it made a high of 3,300 rupees, and now it is trading at a price of 1,900. So the stock price is down, and we can see a consolidation phase over here. But the good point if we want to say about this company, that this company has also given a good PE re-rating, that during that time it was trading at a P of 73, and now currently the P is 27. And now let's get to the last company, which is the India Shelter. So it came up with an IPO and it listed around 600 rupees, and now currently trading at 890 rupees, and the P is around 26. So the stock is also looking in a good upward momentum. So the stock gave a good breakout during March 2025, and currently it is trading in a bit of a consolidation phase. So thank you for watching this video. I hope this detailed analysis of the affordable housing finance companies was helpful to you, and write down your opinions in the comment section that what do you feel which company is best. Until then, see you in the next video.